what the customer prefers. And we have a case of that going on here between my buyer and my favorite lender who happens to speak Spanish. My buyer speaks English but prefers to speak Spanish, so I knew to put him together with the best lender I knew who also speaks Spanish, Gustavo Segura. And we're both here with Patricia Castillo. Today we're here at our home buyer seminar every Wednesday, 5 p.m. I put Gustavo ahead of Patricia because Gustavo's financing my escrow. He's more important. Patricia's not as important to me today. Gustavo, how are you? Do you mind having Patricia listen in with us?
Yeah, no problem. Thank you for joining us, Patricia.
Oh, thank you. Thank you for having me.
Patricia, nice to have you in between your listing appointments. Now that you're all that in a bag of chips, nice to have you with us this week.
I'm glad to be here today and every week.
So how about the market, huh? What's going on?
Yeah, it's still busy on my side. I think one of the things that we wanted to cover was, after we talk about your scenario, of course, is, just the cost of home ownership. I've been talking to some people recently that are thinking about selling because at the time that they purchase their property, the type of loan that they agree to, now it's something that's not sustainable. So that's one of the things that you really have to look at when you're getting pre-qualified, what the terms are, and you want that payment to be sustainable for you for the future. So it's good. I've been going on a couple of listing appointments that, these homeowners are thinking about cashing in on their equity because the prices are still holding steady. And, we're still at a low inventory market. So it's looking, pretty good right now for sellers to put their home on the market right now and really take advantage of the equity that they can benefit from at this time.
So what do you mean when you say the payment's sustainable? What does that mean in English or Spanish, I guess? I'm just a simple real estate agent. What does that mean?
Yeah. So for example, these homeowners that I was talking to just yesterday, they purchased their home over 5 years ago, and it was from a private lender that they received the funding from. And they're paying 9% for an interest-only loan. So their payments are about $6,000 a month, which is not sustainable for them in the long term. That's just interest. Once you add in the property taxes, which is almost $1,000 a month, they're basically trying to get out of the loan that they're in, and they didn't realize that they were going to have to continue with these payments at $6,000 a month. And so,
well, hold it. So how did they not? Let's go back to how did they not know that? What happened that they got surprised? Before we go on, anybody has questions, if you're watching this, I see people on Facebook and YouTube, feel free to put questions there. We'll live chat. We'll pick up the questions live as best we can and respond during YouTube, Facebook, LinkedIn, if you're watching live. And if you're after the fact, we'll get back to you. But explain to me, how do they not, because I know that's one of the fears of buyers is, I'm going to buy it and all of a sudden things change. What changed that they got caught by surprise?
So they originally got a loan from a private lender. So that loan was going to mature. So the lender said, we're going to connect you with another lender, private investor. We're going to get our loan paid off, and then you can basically do like a refinance with this other investor.
And was the reason with the private investor because they couldn't qualify, because it was a unique property, an investment property? What was the circumstance they needed that kind of loan?
So they just didn't have the credit. They just didn't have the credit to qualify for traditional financing.
And this was a shortcut.
Yeah. So, they're looking into getting a home. They've got a large family, 5 children, and one of the spouses has their mother living there too. So, they bought a nice big home, but like I said, it's something where it's not really sustainable anymore. Now with the kids are older, everybody's grown. A couple of the kids are driving. They have more expenses now, and they're still in an interest-only scenario, which is $6,000 a month, which is pretty high at 9%. So,
whew.
I mean, just to think you're only paying interest and you're not paying on your principal yet. And a lot of people were affected through COVID, different scenarios where they were either unemployed, maybe unemployed for a longer period of time versus shorter period of time. And so they came into financial hardships and, they fell behind on their payment. And I was just talking to Gustavo about this the other day because we're trying to help another client get pre-qualified, but because the mortgage rates affect your credit so badly, maybe if it's one, you can try to get that overlooked by a letter of explanation. But when you have consecutive late payments on your mortgage, that really, really hurts your credit. And so the lender sees that as a huge risk, and it's really hard to get a loan at that point. So a lot of people will turn to a private money lender because they will take a lot of these shortcuts. They kind of make up their own rules, and they're going to finance you for the purchase or the refinance, but you're really going to pay for it through the interest rate you're going to get. So through this program that we're doing here, this home buyer workshop, we really talk out all of these scenarios so that we can explain what your future payments are going to look like and make sure that it's something that's going to be sustainable for the buyer.
Yeah. And I was gonna add to that. There's different levels of getting that loan, as Patricia mentioned. If you get qualified on a conforming type of loan, whether it's FHA, a conventional, you're like one kind of borrower. And then if you have self-employed, and you got some income that is a little bit harder to document, you may be a non-QM, what we call a non-qualified mortgage, and that is a different type of borrower with a different type of lender. It's still doable, higher rate. Maybe the first scenario, maybe you get a 6. The next one is 7.5 or 8, and then the last one, like Patricia mentioned, you got your private lenders that will get you for 9-10% or so because they know you have no other options. So, and that's where here we can see, okay, which one are you? You may not know all the options, but we can help guide you as to your options and if there really is something that somebody can do later on or not, if this is your only way to get it. But then you have to have an exit plan out of that 9 or 10% interest rate. You got to say you can only do it for a year or two. You got to do your taxes differently. You got to do something different so that then you can refinance into a conforming loan, which is going to be your lower rates. So,
I find so often that customers feel like they can't ask questions of on the broker or their lender. And I know that you guys, and I know personally, I'm always available. If a customer doesn't understand something, then at some level, I didn't do my job. I started this business in before Patricia was born in 1986.
How about Gustavo?
I was already
and 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 I would have borrowers come to me and say, "I don't understand my loan. I took out a loan for 200,000, and now the loan balance went up. How does it go up?" Well, there was in the old days there was such a type of loan. There really isn't today the same type of loan. It was very common by the major banks and savings and loans, who all went bankrupt with these loans, by the way. They screwed all their customers, and then eventually they all went out of business, and they all got jobs at new banks, just kind of how it works. But what struck me was that the customers didn't know, they didn't understand what they were getting into. And I remember thinking, why would you do this? Like, why didn't you talk to the loan officer? Or he didn't return phone calls. He wouldn't answer questions. And I think that's the part that customers need to understand is, I know for me personally, I know Patricia and I know Gustavo, we're here because we want to help customers. That's why we do this business. That's what makes this business, instead of just a job, it's something I enjoy doing. And so to anybody there, if you don't understand what's going on with your loan, the payments, the costs, the potential changes in the future, taxes, anything, raise your hand if you're my client, especially, or if you're not. Come on this call or give us a call and we'll walk you through it. And let's see what the problem is. We get paid to solve problems all day long. There's no excuse for a professional not to have time to explain things to their customers. It's just, to me, malpractice.
Yeah, absolutely. And, I've heard, other agents in the business, they're just kind of rushing through paperwork. They're rushing through different processes and not really taking the time to explain everything so that the customer feels not just comfortable, but also, educated and empowered and informed, right? Because
Yeah.
when you're informed, then you feel like you're making a confident decision, and you feel like you have that knowledge that's backing your decision.
Right.
Yeah.
Other than
Yeah.
that, you're kind of going into it blindly and feeling, insecure about it.
And nobody should go into a deal like this blind or insecure. It's not acceptable. It's just, I don't know how else to say it other than that. It's just not acceptable.
Yeah, and I mean, it is a very scary process because of the amount of paperwork or the amount of guidelines and federal guidelines and all these different things. But it really is our opportunity to really explain it and walk them through it from start to beginning. This is
Yeah.
what's going to happen. These are the things that you can expect. Share when you really get down to the loan estimate and the closing disclosures. It's really 2-3 pages that it just takes a couple minutes to go through and walk them hand in hand so that they know what to expect at closing, so that they get it instead of just like sign here and that's it, which is what they used to do because they wanted to move on to the next one. And every person should feel like they're signing and feel good about the whole process through the cost that they spent, why that they spent, 8, 10, $12,000, where did that money go? And then also, what is their loan terms? What's going to happen? Is it going to adjust? I'm helping someone out right now in your same scenario, Patricia, where they are in an adjustable, and they've had that for like over 10 years. And now with the rates going up, I mean, they're just paying such high rate, and they knew they were an adjustable, but they didn't know how to get out of it. They didn't know what to do, and it's unfortunate. But this is why we do these kinds of webinars to make sure that people can raise their hand and we can explain them and make it a little bit easier.
I think there's no reason why a customer shouldn't be able to find out. I saw a recent article I'm going to share on the screen here. There's just such nonsense. I think that customers assume they're going to be taken care of, bad to take care of. This is Business Insider, and this is an article they wrote. Real estate agents, of which I'm one, are tacking ludicrous junk fees onto every house purchase. And I said to myself, well, how many lies are there in this headline? And I'll count them. Number one, real estate agents aren't tacking on fees on it. It might be that at some real estate brokerages, they add on fees. But as a general rule, it's the broker who is in the contract with the customer, not the agent. The broker has to approve that process. Agents on their own just don't make up those rules or that process, number one. Number two, tacking means like as if we just stick it on the end of your bill without you knowing about it. Everything we do in real estate is in writing an estimate in advance, whether it be a loan or when we buy a property. I know personally, I just did a listing last night. I always give the seller an estimated net sheet of what the fees are. There's no tacking on fees. You should always get a written estimate of what the costs are and the expenses are. Ludicrous is judgmental. Junk fees, well, there are companies who charge maybe a lower commission, but they charge a admin fee. So they might, instead of 6%, charge 5%, but add a $400 fee. And that might save you money because the percent they're knocking down might be $1,000 savings. They charge 400 more. You're netting the $600 savings. That's a way to price themselves to be competitive. And this is onto every home purchase, and that's just not true. I've never added any junk fee on any home purchase. Personally, I know there are agents that do or companies that do. I don't. My point of all this is to say that you as a buyer or seller should expect in writing, signed by the professional, an estimate of the all the expenses, as well as the monthly cost if you're buying a property, which would include the mortgage and the taxes, the insurance, if there's homeowner association dues, by law from the lender and by good practice by the agent. And if not, ask them for that. There's no excuse for you to be surprised by anything. So
Right.
anyhow, I'll get off my soapbox on that one.
No, definitely. And we're required to do that within 3 business days after getting your application. So we're supposed to hand out a loan estimate. And I think, if you guys would like, maybe next week, I can do a loan estimate. I can share a loan estimate and just, blur out all the personal information. But so people can see the fees, the type of fees. They'll be able to see prepaid. They'll be able to see the home insurance, the property taxes, the escrow fees, all those kinds of things. So they get to see this is what we're walking them through, so that they understand that $6, $7, $8, $10,000 is not going to Patricia's pocket. It's not going to my pocket. This is going to your escrow account, and that's usually what it is. About 30% of those fees are going into your escrow account, and then you got another 30% that may be going for escrow. And we can show them how it splits up. So I can definitely share a loan estimate and a closing disclosure as well, so that people can see what kind of fees we go over.
I thought it goes to Patricia's pocket. It doesn't.
Those are my hidden fees.
Yeah, this is junk fees.
Those are my ludicrous fees I'm tacking on.
Oh, your Lucas junk fees.
Yeah.
Yeah.
If only, wouldn't that be nice on every deal?
Yeah.
I mean, it wouldn't be, because who wants to do business that way? But well, that's how Patricia pays for that very fancy living room and view she has.
Office.
Yeah.
Yes.
Very nice. Okay, and how about the interest rates? We're staying between that 6 and 7. It's been stuck on that number all year long. For all the excitement we had at the end of last year, it seemed like this year it's just boring, constantly between. Let me get the right numbers here. 01, 01, 2023. All year long between 6 and 7%. Just the whole year.
That reaction period, up and down, up and down. A new report comes out, we react to it, and then it just kind of adjusts, But I do think that over the next 2 months, we're going to be seeing some slower, lower rates. So within inflation, there's different sectors that they're measuring, and it's already showing that a lot of those sectors are coming down. But we still were waiting for shelter, which is the housing part of it, to come down, and it did. But then all of a sudden we had weird things like the used car market. It catapulted to a 4.4% change. It was just crazy. And that's because people were not buying new cars, and then they quickly switched over to buy used cars. So that's going to go away. So when that goes away, it comes down. So we are going to see rates to slowly continue in a downward trend. But at least we got a little bit of consistency, I guess you can call it.
Yeah.
Exciting times. I think it's going to continue exciting. We have an election a year and a half from now, and you can already just feel the posturing. I feel like a field mouse in the jungle with the giant elephants fighting and the lions, trying not to get trampled in the politics of the Fed lowering rates, and Congress, debt ceiling, no debt ceiling. I'm just trying to help people sell one house at a time here. So try to keep your head down, keep your budget tight, stay within your expenses. Don't buy a new car and spend. The average new car payment is over $700 a month.
Yes.
Yeah.
What the heck?
Yeah, I saw that too. It was close to $800. It's just unbelievable.
I remember that one client we had.
Almost $2,000.
Late last year, I think. Yeah, their car payment was $2,000 a month.
Yeah.
I had one who had a prospect I was working with who had a car payment of like $1,250 or $1,300, and in my mind, because he told me he needed it for his job, he's a security guard. I imagine he had like a Ford 250 cab with, maybe he had like a locker with, because he's in security, maybe he has to keep guns and equipment in the cab rather than the trunk or something. And for that payment, I'm thinking, it must be like a really tricked out. And then I walked by and it was a fairly ordinary SUV, and I thought, $1,250 a month for that? Are you crazy? So let's keep our budgets in mind. Let's buy a house, make some money in depreciation, and we all get rich on that, right?
Yes. Yeah.
Okay, well, Gustavo, thanks for good work with my client. For those guys who don't know, I met Gustavo through Patricia, and he's been helping us and our team and helping on these calls. And I had a client who I thought was just the perfect fit for him, and really he did a great job and helped the client get into escrow. So to me, he helped my client get the house sold, and it turns out the buyer's mine as well. So thank you, Gustavo, for your help on that. Really appreciate it. And even though I speak a little Spanish, enough to make a Spanish-speaking client feel comfortable that I respect them and care, I can't do business in Spanish. Gustavo doesn't have to. That's not his only language. But I do think there are customers who are just more comfortable, even though my client speaks perfect English. For whatever reason, he's more comfortable doing business in Spanish. And so he got introduced to some of the wrong lenders, and he found the right one, and we're happy and we're moving forward, right?
Yeah, exactly. And sometimes that's how it is. They're an older couple as well, and I can certainly understand that. Having that fear maybe that they're going to miss a word or something, and it's such an important thing for them to be buying their first home.
First home.
Yeah, so that's why, when they ask me certain questions, I'm like, yeah, let me help you out, or here, let me
Yeah.
walk you through it. Jump onto the computer, do this, because I always think of it as my parents too, and I'm like, hey, I would want somebody to take an extra 5 minutes to help them out instead of just telling them to call someone else or just not even do it and just sign.
Right.
So I had a couple text messages from him, and I was like, yep, you're in the right path. Go ahead and hit that button. That's what that means, and go through it. But you know what? That's just part of the nature, I guess. You just got to do it sometimes.
Yeah, they couldn't do e-signing, and you were able to walk them through it, which
Yeah.
really it wasn't. I mean, not disrespectfully, you didn't give me special technical support that I couldn't have. It was you made them feel comfortable and confident enough to give it a try, make a mistake, get it fixed, and
Yeah.
get it done. So
Exactly.
good job, Gustavo. Thank
Yeah.
you so much for your help.
Yeah, no
So,
problem. Thank you.
my words of wisdom for the week are: if you have a customer looking to buy a house, or if you're looking to buy a house, have some questions, talk to a great lender. We got one right here in Gustavo.
Thank you.
Gustavo, last words for the week.
Yeah, definitely shop around. I keep on seeing. I just had somebody else that came to me, and they're right now the way the lenders are making additional money is through fees and lender fees, points, and it's unnecessary. And I'm looking at these points, and it's just money. That money is going away. That is not going to escrow. That is not going to to your to pay for the transaction. It is just going directly to the lender's pocket. So definitely you want to make sure you shop around and you check out things.
I'm playing a little Smokey Robinson shop around in the background. They're probably going to get flagged by Facebook for a copyright violation, but you better shop around.
Yeah.
I
And,
love
and
his music.
start your shopping around with Gustavo. You won't go anywhere else.
Yeah. Thank
Sorry,
you.
Patricia Castillo from the 562.
The 562. Yeah, I just want to, just let everybody know, even though, we all like to buy ourselves a nice little something every now and then, really just if you're looking to buy a house, if you've even thought about buying a house, the moment that you start thinking of purchasing a home, really, make sure you're taking care of your credit. It's so important. That's really going to get you through to the next stage, which is going through the loan application. And you really want to reward yourself with the best interest rate that you can possibly get. And it all starts with taking care of your credit and living within your means and not overspending and not, opening other accounts that you really don't need just to get the, it's like that bait that they get you at the sales counter when they say, do you want to open an account and save 20% today? And it just sounds like an amazing deal. And so you hear people say, yes, I'll open an account. But you really, you're going to pay more in the interest than you are the 20% you're going to save that day. So
I'm so with you on that one.
No.
I'm so going out on credit cards. I'm going to save money on gas cards. I used to drive a lot, and so my head strategy, I'll get a gas card for each of the companies so that I'll save, each one. Well, if you have enough new ones, they none of them want to mail you bills. They all want to be electronic. It goes to your spam. You don't pay it. Now you have a late fee charge of $25,
Right.
interest at 2,000%. So your 5 cents a gallon you save just went down the drain. So no, just tighten up. Keep it simple. As Dave Ramsey would say, beans and rice, beans and rice, beans and rice, and get within your budget, pay off your debts, and get to the wealth management, the wealth accumulation side of things.
Yeah.
So that's my advice for the week. Patricia, as always, thank you. Gustavo, thank you. And thank you for helping me with our mutual client there in Palmdale. And for the rest of you, we do this every Wednesday at 5 p.m. It's also live streamed onto Facebook and YouTube and various social media. Feel free to put comments there, reach out to us if we can help. And otherwise, make today your best day ever. Thank you, everybody.
Thank you, guys.